Hey everyone, welcome back to Corporate Decoder, the place where we dig into those corporate filings so you don't have to. Today we're diving into Nauticus Robotics' latest 10K report. It's like opening a treasure chest, except instead of gold doubloons, we find complex financials and risk assessments. Let's see if this treasure sinks or swims. First, a quick rundown. When we talk about Nauticus or the company, we're talking about Nauticus Robotics, the company. We will also need to know that old Nauticus and new Nauticus refer to the time periods before and after the merger respectively. So what's the story here? Well, Nauticus is in the business of building underwater robots. As of June, the company estimated their non-affiliate common stock value around $17 million. Nauticus is focused on electric, autonomous subsea robots, aiming for industries like oil and gas, defense, and even things like underwater mining. They're touting better, cheaper, and greener underwater operations. In the fourth quarter of 2024, they ran their first successful autonomous survey with their robot Aquanaut. To boost their capabilities, they're buying Seatrepid, a company that offers subsea robotic services with ROVs or remotely operated vehicles. This deal means Nauticus can combine Seatrepid's ROVs with their Aquanaut to offer even better underwater services. The sale closed in March 2025. Of course, they're not the only ones in the deep sea. Competition comes from established ROV companies, software providers, and even companies making electric manipulators for subsea tasks. Ludos is a prime competitor for maritime defense projects. Their current customers are mainly offshore energy producers in the Gulf of Mexico, but they're also working with a customer in Brazil. They're also working on contracts with the US government as well. Operating in the ocean is full of rules. Think Federal Acquisition Regulation, the Defense Federal Acquisition Regulation Supplement, and things like the Jones Act and Clean Water Act. Staying on top of all this is critical. Keep an eye out for their proxy statement too, because some information from there gets pulled into this report. Now let's dive into some potential hazards. It's always wise to look at the risk factors because as clear as management intentions are, there are some speed bumps on the way to success. Nauticus admits it's an early stage company with a history of losses. They anticipate racking up more expenses for the foreseeable future and negative cash flow throughout 2025. It's banking on wider adoption of their robots, but no guarantees there. Adding to the pressure, some past financial statements had to be restated due to errors. Not a great look, and it means more scrutiny, legal fees, and management time diverted away from actually running the business. Compounding the restatement issues, they've also flagged material weaknesses in their internal controls. That's accounting speak for we need to get our financial reporting in order, which they're working to fix. Right now, a handful of customers make up the bulk of their revenue. If they lose one or two of those, it could really hurt. This also means more pressure to accept unfavorable conditions. They also acknowledge the risk of not managing their resources effectively, which could hinder the design, development, and launch of new robotic systems. As a robotics and service company, financial projections for performance rely on demand for our robots, the cost of manufacturing, and other economic variables. For the foreseeable future, if commercialization is successful, their revenue will depend on only a few models and operating robots. Any hiccup with a robot in service could significantly affect revenue. Of course, with robots running in the ocean, there comes a risk. Software glitches, defects, or even operator error could lead to product recalls, safety concerns, and harm to their reputation. Listing on the Nasdaq exchange is also on their mind. If they can't keep their stock price and equity levels up to par, they risk getting delisted. Now, let's get to those key financial results. Remember, we're looking at the year 2024 compared to 2023. Service revenue, this number is critical, showing how much money they're actually making from their robots doing work. Service revenue plummeted by 73%, landing at $1.8 million compared to $6.6 million the previous year. That's a huge drop, suggesting a significant slowdown in activity on government contracts. The costs associated with these services also decreased, which is good. It landed at $9.7 million, down from $11.9 million. So while not as big of a drop as the revenue side, at least they're trimming some expenses. Depreciation, however, jumped by 138% to $1.7 million. It seems like those assets got older, or maybe they bought more equipment. This shows the vehicles in operations and equipment are aging and being used. Now, this is an interesting term: general and administrative expenses. These are the costs of running the business, salaries, office stuff, that kind of thing. That number decreased by 27% to $13.3 million. This shows management is focusing on expenses and cutting down. And now for the big one, their net loss skyrocketed to $44.9 million, up from $50.7 million. It seems like their debt didn't help. They report a massive $127 million loss on the extinguishment of debt. This is an accounting entry and doesn't mean they are out $127 million in cash, but it's a reflection of the mess related to the debt financing. Since they fair valued some of the debt, this accounting reorganization is not a positive sign. Interest expense dropped though, so that's good. At the end of 2024, they had about $1.1 million in cash, which they acknowledge isn't enough to cover operating expenses. All this adds up to a company in a tough spot. They're facing increased costs as a public company, ongoing development expenses, and an uncertain path to profitability. But here's a spark of hope. The recent acquisition of SeaTrepid could be a game changer. The additional experience and equipment could open up new service opportunities and improve financial performance, which as it stands seems like it can definitely use some help. One area they're focusing on is cybersecurity, implementing various safeguards to protect their data and systems, especially because, as you can imagine, underwater robots may cause significant financial or reputational risk if hacked or otherwise compromised. Nauticus employs an IT systems administrator with relevant experience who is responsible for the day-to-day management of the cybersecurity program. They're not aware of any past events that impacted the business, but they stress that new cyber attacks are always evolving, and so is their incident response plan. Their Vice President of Corporate Development and Administration will report to our Board of Directors. And that's all as usual. Many important legal agreements and documents are referenced. Feel free to follow along. Management seems committed to running and growing the company. Everyone signed the report and is ready to start the next year. So what's our take on Nauticus Robotics? It's a high-risk, high-reward situation. The technology is innovative and the potential market is huge, but the current financials are concerning, specifically the loss of government contracts in 2024. The recent partnership with Leidos for defense-related projects is a smart move that can bring more revenue. Right now, Nauticus needs to demonstrate they can actually turn their tech into consistent revenue and manage their spending. I'd say watch this one closely. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more deep dives into the world of corporate filings.